Hey guys, Gareth here and welcome back to the channel. So many of you have been asking me what is going to happen in the investment world in 2021, and more importantly, where should you be investing your money? Should you be buying real estate or stocks or bonds or maybe cryptocurrencies? Or maybe everything just seems too expensive and it's better to just leave your money in cash? That's what I want to take a look at in today's video to answer some of those questions for you. I'll also identify some of the major things you need to look out for and how you can invest to benefit from them. So I hope that the weather forecast for 2021 is 100% chance of making it rain. So guys, I've come up with my top 3 investments for 2021, and I'm going to break each one of them down and talk you through them and why I think they could be good options for you. But first, from the research that I've done and conversations that I've had with some of the people at the biggest investment firms in the world, there seems to be this consensus that 2021 is going to be a risk-on environment. Okay, so what does this mean? So in a risk-on environment, people are a bit more comfortable with taking on a bit more investment risk. And so you will see your riskier assets like emerging markets and stocks doing pretty well. They'll have quite a bit of momentum behind them. But the flip side is that your safer assets like gold, the US dollar, Japanese yen, Swiss franc, they may struggle a bit in a risk-on environment. Okay, so this is sort of a broad theme for the year, risk-on environment. Now let's take a look at the top 3 investments. Number 1 is emerging markets. So as I mentioned earlier, in a risk-on environment, emerging markets tend to do well. A lot of countries are going to be investing in the emerging markets, and this also strengthens their currencies because of the increased demand for people investing in their countries. Some of the main emerging markets are your BRICS nations. No, not that kind of brick. So this is Brazil, Russia, India, China, and South Africa. So let's take a look at the South African rand, for example. Right, when we initially saw this big shock in the markets in the first quarter of 2020, the South African rand weakened a lot. Everybody was going to your safer assets like the US dollar, and emerging markets really struggled. But since then, there's been this turn to a risk-on market, and we've actually seen that the South African rand has strengthened a lot compared to the US dollar since then. Then we have China, which is now the second biggest economy in the world. China is booming. Their economy is shooting the lights out. And actually, the Chinese economy is at levels above what it was before the pandemic. And it's one of the only countries that is actually operating at levels higher than what it was before the pandemic hit. And when you have China growing and doing well, there's this increased demand for commodities like iron ore and copper. Who's some of the big producers of iron ore and copper? Brazil and South Africa. And they will benefit from this increase in demand for those commodities and increase in global trade because they export these commodities, they mine them and then they export them, and exporting these commodities will boost their economies. And then you've got India with the second biggest population in the world and a very young population that's expected to grow really fast. So when this pandemic initially hit, everybody was worried that, the emerging markets, these developing countries, especially the ones in Africa, are going to be quite vulnerable and they're going to be hit really hard. They don't really have the strongest public healthcare facilities. But in the end, what we saw is that the developed nations like the US, the UK and Europe, they were actually hit much harder. And now people are expecting that these emerging markets are going to bounce back faster and stronger than the developed countries. So it's kind of opposite of what was initially expected to happen. So when we start to see this recovery taking place in global trade, a lot of these emerging markets will benefit from it. They're really well positioned for it, especially the ones that have commodities or affordable labor markets. So especially in the East, like China and India and Vietnam. Okay, so emerging markets could do pretty well, but how are you going to invest in it, right? So one way, and probably the easiest way, is to do it through an ETF or exchange traded funds. And there are quite a few of them that invest specifically in emerging markets, like the EEM and the VWO ETF funds. These are both ETFs that I've invested in the past. Another way is if you invest more directly into those countries. And you can probably do this most easily in two ways. The first would be to open a share trading account with a broker so that you can trade individual stocks in those countries. And the second is to actually go out and invest directly in real estate by buying a property in one of those emerging market countries. Now, for both of these, the individual stock trading account and the real estate option, just keep in mind that these are almost always going to be priced in the local currency. So you are adding a bit of a foreign exchange risk to your portfolio as well. You've got the performance of those individual assets, but then also the exchange rate of however it moves relative to your country, your currency that you normally invest in. Now guys, as I was making the script for this video, I was adamant that I'm going to do my top three investments for 2021. But I actually had a difficult time to bring it down to three, and I had probably 10 at one stage, and I was eliminating them to choose my favorites. But I ended up in 4, so I'm going to share a bonus one with you. So stick with me to the end. I'm going to give you a 4th top investment for 2021. Okay, so number 1 was emerging markets. Number 2 is going to be real estate. Now, in last week's video, I spoke in quite a bit of detail of what I think is going to happen in real estate in 2021. And in summary, I think it's going to do pretty well. You know, there's a lot of factors that are going to keep fueling the real estate market to do well, as it did in 2020, right? In 2020, real estate did super well. It was up around double digits in most markets. So it had a really good year. One of the big things that really fuel real estate prices is interest rates. And what we saw in 2020 is that some of the countries where real estate did really well were the countries that dropped the interest rates most. Like South Africa, US, Canada, you know, they changed their interest rates quite a bit, bringing it down. And with lower interest rates, it means that your mortgage payments are lower. And with lower mortgage payments, more and more people are able to afford those mortgage payments. And so they enter the property market, there's more buyers, there's more appetite in real estate, and this increase in demand pushes up the real estate prices. So interest rates are really important. And with these interest rates, the expectation across all economists that I've spoken to, the expectation is that they're going to stay low at least for several years before they start increasing. And this low interest rate environment gives the real estate market quite a bit of momentum. So it's expected to do quite well in 2021. Now, it's not all plain sailing. There are going to be some headwinds and there are some challenges for real estate. And I break those down in the video that I did last week. So check out that video. There's a link in the description. Have a look over there. So my third investment for the year is US stocks. Now I know this one is a bit controversial, and maybe many of you are surprised to see this one because, you know, the US stock market is at all-time highs right now. And many people think it's just really expensive. And I would agree, it does seem really expensive. But let me talk you through it of why I think that this could still be a good option for 2021. You know, at the end of the day, the US stock market is absolutely massive. It's huge. It's by far the biggest stock market in the world. And it's generated really good returns over the history. You know, if you look back over the last 90 years, on average, the US stock market has returned 9.8% per year. And that's really good. Now, personally, I've been selling some of my stocks and taking some profit because it's gone up so much. But as a longer term play, and especially through ETFs or exchange traded funds, which are a bit more passive and you don't have to worry about picking the right stock, as a longer term play, there's still a lot of value in investing in the US stock market. But maybe you're not into ETFs and you prefer investing in individual stocks. Well, there could still be opportunities. For sure there will be opportunities. I mean, just look at 2020, right? We went from all-time highs down over 30% in March, back up to new all-time highs before the end of the year. And in that movement, in that volatility, there were tons of opportunities for you to pick up stocks. Maybe a stock like Tesla, which is up over 700% over the last year. At the early part of 2020, the US stock market hit all-time highs, but the economy was doing really well, right? Record low unemployment and things were going well. Then we had the pandemic hit, stock market dropped 30%. And subsequently, it's bounced back up to new all-time highs. So the stock market is the highest it's ever been. But the economy is not. The economy is not at the level it was before with record low unemployment. The economy is in a really, really bad shape. And so the stock market at such a high level, when the economy is so low, it just seems very, very expensive. Okay guys, so here's a quick heads up. I'm gonna nerd out a little bit on the technical point here. So if you're not into that, just skip forward 30 seconds or 40 seconds into this video. But if you want to stick with me, I'm going to explain another reason of why the US stock market seems expensive right now. Okay, so a common way that investors will look at a stock market and try and establish whether it's expensive or cheap is looking at a PE ratio, or a price to earnings ratio, right? The higher the ratio, the more expensive the market is and it's overvalued. If it's lower, then the market is cheap and there could be some good opportunities for you. Now, the long-term average of the US stock market is a price to earnings ratio of 15.9. Okay, 15.9. So anything above that means the market is expensive, it's gone up too much. Anything below that means maybe it's cheap and there could be some good investment opportunities. So if we compare the current price earnings ratio to the historic one, we can determine, is the market expensive or cheap? So the historic is 15.9, and currently the price earnings ratio of the US stock market is, wait for it, 37.3. So it's more than double the historic average. So the market seems super expensive. Now, yes, we're just looking at one simple ratio and there are many ratios to consider. And yes, the earnings of that price earnings ratio would have been really distorted in 2020, and you'd expect a bit of a bounce back and recovery in 2021. But still, it's really expensive and pretty interesting to see. Okay, so you may be thinking, Gareth says you should invest in the US stock market, but then in the same breath, he's saying it's really expensive right now. So what are we doing? Why would the stock market keep going up in the US? So there's three reasons of why the US stock market could go up this year. Number one is that risk on environment that I spoke about earlier, right? The riskier assets, which include stocks, tend to do well in a risk on environment. So reason number two is that even though the investors would agree that the US stock market seems really expensive right now, okay? The problem is, where else are you going to put your money to try and generate some sort of return? If you leave it in cash, you're not even going to generate a return equal to inflation, so you're actually losing money. Put your money in bonds, not much return. So where do you go to try and generate some sort of return? Hello, stock market. And that's why I think a lot of people will still be putting their money into the stock market in hopes of trying to generate some sort of return. And lastly, number three is the US Federal Reserve, who have said that they will do whatever it takes to make sure the economy is stabilized and recovers. Whatever it takes. They're happy to just fire up that money printer and send it into overdrive to make sure that the economies recover. And this type of support gives a lot of comfort to investors in the stock market and pushes it up even higher. Now, I'm not necessarily saying that you should go and aggressively buy the US stock market, but instead just consistently keep adding to your positions. And especially when you see a dip in the stock market, that could be a good opportunity for you to buy some stocks, especially if you have a longer term focus when it comes to the US stock market. Okay, so here is the bonus investment for 2021, and it's cryptocurrencies. Now, I know this one is going to be very controversial because people are so divided when it comes to cryptocurrencies. They either love it or they hate it. So I'm going to tell you why I think cryptocurrencies can do pretty well in 2021. Now guys, I have to be honest with you and tell you that I haven't always had the best experience when it comes to cryptocurrencies. And I'm going to tell you why. Story time. Long ago, okay, just 6 months ago, in July 2020, I made a video where I spoke about the Twitter hack, right? The Twitter accounts of Elon Musk and Jeff Bezos and Barack Obama got hacked and fake tweets were sent out. And when I was doing the research and preparing that video, I learned a bit more about the darker side of cryptocurrencies, and it's used for some pretty dodgy stuff. I mean, it's kind of scary. And while the blockchain technology is great, I know of many people that have had their cryptocurrency accounts hacked and completely emptied out. And if there are other YouTubers watching this, you'll know what I'm talking about. But the comment sections are rife of scammers trying to take advantage of people and using cryptocurrencies to cash in on it. They just love Bitcoin for this. It's like catnip for cats, you know, they just love it. Now, despite my bad experience, there's no denying that there is a lot of value in cryptocurrencies. And there's opportunities to make some good money from investing in cryptocurrencies. And at least now you're aware of some of the things to look out for and some of the experiences that I had, so you can be on the lookout for those and avoid them. So aside from all the usual reasons of why people love cryptocurrencies, like the blockchain technology and the great innovation, there's three more reasons why I think cryptocurrencies could do well in 2021. Number one is that, similar to when we spoke about the US stock market earlier, many investors are turning to cryptocurrencies, you know, just to try and generate some sort of investment returns, You're not getting it from cash, you're not really getting it from bonds. So it's either stocks and cryptocurrencies. And cryptocurrencies is becoming more and more popular to try and generate some investment returns. Reason number 2 is that some of the big names in the investment industry are really starting to sort of embrace cryptocurrencies, and many of them are even investing their own wealth into cryptocurrencies. And this type of acceptance by the investment world is a big boost for cryptocurrencies. And reason number 3 is that there's just so much momentum behind cryptocurrencies. Don't underestimate the power of momentum. You know, there's so many investors that are just flocking to try and get into cryptocurrencies. There's almost like a sense of FOMO, right? And it's performed extremely well. Cryptocurrencies have just been shooting the lights out. Now, there could be some malicious reasons for why the Bitcoin price has been going up so much, and it wouldn't be the first time that the price has been manipulated. We've seen this before several times in the past, so just be cautious of that. Just keep an eye out for that. And as always, guys, while I've researched this and I've applied my mind to it, you know, it's just my opinion, but it'll give you a really good foundation to have a conversation with your financial advisor to make sure you invest in the best investments for you, for your circumstances, for your risk appetite for 2021. There is no one size fits all when it comes to investing. You know, what works for me might not work for you. So make sure you do your research and speak to your financial advisor before making those investments. And one last thing, guys, at the time of recording this video, it seems that the Democrats are flipping the Senate and will actually control all 3 parts of the US government, the so-called blue wave, right? And this isn't what was initially expected, so it'll be interesting to see how the markets react to this and digest this in the next few weeks and months. So just keep an eye out for that. So where are you going to be investing in 2021? Cryptocurrencies, real estate, US stock markets, emerging markets, something else? I don't know. Let me know. Let me know in the comment section down below. I'd love to hear. And that's it for the video today, guys. I hope you enjoyed it and found it useful and interesting. And if you did, please do me a solid and give it a thumbs up and subscribe to the channel. You can also follow me on Instagram. Here is my handle, and I'll see you next time.